Long Week, all this week, sponsored by Cathay Pacific.
And coming up after the break, Philip Chan from Shanghai Hong Kong International Securities tells us more about investing in the volatile China markets. Stay with us.
In Asia, business is more personal, and our new business class now has more personal comfort, more personal entertainment, and even more personal space. And our more personal style of service that always comes from the heart. Cathay Pacific, the heart of Asia.
Thai people will have to wait a while longer.
China has vowed to dismantle. Malaysia doesn't have a history of research.
Booming here at the Karachi Stock Exchange.
Bumpy ride on the Hang Seng Index.
With the Bank of Japan.
The German and Malaysian governments
With the side effects of a booming economy.
primary concern for a country like Indonesia. But the political message is loud and clear.
Welcome back to Breakfast Briefing. Well, the Shenzhen B-share market's been on a volatile ride recently. The market rose as much as up to 60% about 3 weeks ago at one point as domestic investors snatched up shares originally meant for only foreign investors. Well, the Chinese acted on the expectation that the exchange would soon formalize the participation of locals in the market. But in a space about in the past week, Shenzhen B-shares crashed some 33% after the central bank said it's banning new domestic investment in B-shares. So does this mean foreign investors should stay out of Shenzhen, and will the bad news spread to Shanghai's stock market as well? Well, joining me live from the Hong Kong studio is Philip Chan, Research Director at Shanghai Hong Kong International Securities. Philip, good morning to you.
Good morning, Karuna.
Well, first off, what's the status right now in terms of the authorities clamping down on the purchase of B-shares by locals in Shenzhen?
Yeah, the status at the moment is that they're considering they're still considering what they're going to do because, I mean, officially locals are still not allowed to buy B-shares. That's actually decreed in law, but you know, except for certain circumstances. And what's been happening is, of course, the authorities have been turning a blind eye to the purchases by the locals up until now. So there has been rumors in the press and from leaks from the authorities that some imminent ban is forthcoming on locals trading B-shares, but it's hard to see how they're going to be able to do that.
So
the way we see it.
What's been the reaction so far in terms of the local investors? Are they starting to get out now, given the reports that have been leaking out?
Yeah, you can see that in the trading in the last few days, particularly over the last week, that the market's been coming down quite sharply. You know, as it went up very sharply, so it's come down quite sharply as well on this news. It has been helped, I should say, by some foreign institutions. They have been trading out as well because they've been using the opportunity to sell down, or you know, maybe reduce holdings or sell down holdings in the liquidity that we've had in the last few weeks.
How much further do you think the Shenzhen market will go down, given that local and as well as foreign investors are getting out of the market?
Well, it could go back down to where it was, you know, a couple of months ago, and I don't see it much further down than that, because that was very much a base which it was moving along for some time before that. But I don't think that local participation is going to go altogether, because you have had this, you know, these sort of large numbers of new accounts opened, and those investors are quite active, and whether they may reduce their activity, but I still think there's going to be activity there, and I don't think that the authorities are going to be able to clamp down completely, bar sort of banning, you know, putting a very tight clamp on opening new accounts. But those accounts, those accounts which have already opened are still open, and when it comes down to it, the authorities don't want to stamp out liquidity in the market altogether.
How about investors in the Shanghai stock markets? Should investors be concerned in terms of developments in Shenzhen?
Yeah, well, you've had some knock-on effect in Shanghai as well. The B-share index has risen, not as substantially as the Shenzhen B-share index over the same time frame. In fact, it's been coming down in the last week as well. I don't think that that Shanghai is going to. It's a volatile market as well, but I don't think it's going to be as volatile as Shenzhen, and investors there shouldn't be so concerned. I still think that even at levels which we saw a week or so ago, the markets still look cheap, generally speaking.
In terms of for China plays in general, overall, looking at China plays, do you think that more of the investors are turning to H shares and N shares instead of B shares in China?
Yeah, well, there's a mixed feeling on this. Actually, there is a feeling that investors are turning more to B shares rather than, and they're leaving the H shares alone. The H share index has actually done very little over the last few months. But I don't think that it's the correct. I don't think that sort of investors should segregate the China indices, the China stocks, just according to their indices. I think that they should look at them individually as companies, and regardless of what index they're under, whether it's the H share index or the B share index. And if those companies are good and they're sound, then they should invest in them. It doesn't matter where they're listed. That's how we see it.
All right, Philip, we're running out of time, but I want to thank you very much for joining us early this morning.
Okay, thanks.
And that was Philip Chan of Shanghai Hong Kong International Securities in Hong Kong. And looking at how Asian stock markets performed yesterday, here are the closing numbers starting in Japan, where the Nikkei